I know you've been hearing about the 50-year mortgages, so let's check those out together.
A longer fixed rate mortgage would lower monthly payments, but would also create a higher total cost because of all that interest over 5 decades. Take a $400,000 loan at 6% interest. Under a 30-year mortgage, the monthly payment would be just shy of $2,400. Under a 50-year loan, it drops to just over $2,100, a savings of nearly $300 a month. But over time, that savings is erased by a much larger interest bill, because while the total interest on a 30-year loan would be about $463,000, the interest on a 50-year loan would total more than $860,000. Many, including longtime allies of President Trump, are not on board with the idea.
So those 50-year mortgages, when you really run the numbers, it damn near doesn't even make a lot of sense to throw on 20 more years of interest payments just for that $300 difference. I understand the more that you spend, the more vast that difference might be, but even still, so what we talking about, an $800,000 home? So now a $600 difference every month, that's a big difference. But to have that type of interest on the back end, me personally, unless I'm really buying single family homes in the Midwest, like really on the ground, getting those in, trying to rake those up, I can't see a 50-year mortgage making sense. But again, if I'm strictly buying for cash flow, because mind you, there's people that's strictly buying for cash flow. So they don't care how much the bank gets. As long as they get what they need to get, so what? Give the bank what they want. When you're buying for cash flow, it's like that. But the average person isn't buying for cash flow. The average person is buying to live in that home. So when you're buying to live in that home, to then hit the average consumer, the average homeowner with 20 more years of interest and $400K spread, ooh, that's big money. That's big money coming in. So that's interesting how that's even being talked about right now. And gotta get creative. I get both sides, because you gotta get creative too. So what you gonna do? Just have it at a standstill? Nobody does anything? All the older people just sit on, what they have, and all the younger people just try to work for a down payment that isn't even gonna put a chip in their mortgage. Now they got a crazy mortgage payment too. Plus put $150 down and it didn't even put a dent in it. And you got property taxes on top of that. So I get the creativity behind it. I just don't see a lot of benefit in it, being that the interest payments are gonna be so high for so long. I just don't see a lot of benefit in it unless, like I said, you're buying for cash flow in the Midwest. Then I think that makes sense. Why not like a 50-year mortgage and have the payment $200 less? Who cares? Who cares? That's better for you. $200 less right now? Okay, cool. Because I'm cash flowing anyway. So I think that does make sense. But if you're not doing that, it's hard for me to see it. I'll see you on the next one.